This is engineering.
Will be joined. Okay, I'd like to call this joint meeting of the Board of Directors of the Town of Carefree, Arizona Utilities Community Facilities District, which we will refer to as the UCFD throughout this meeting, and the Board of Directors of the Carefree Water Company to order. Candace, would you do the roll call? I believe everyone is there with the exception of Steve Hatcher at this time.
Yes, I see board members, Tony Geiger, Vince D'Alicio, Cheryl Croyer, Chairman Peterson, Vice Chair Crane, and then Dan Jackson, Michael Wright, Grant Hamill, Zach. Is Zach on?
Yes, I've seen Zach.
Oh, there he is.
I'm here.
I've got him. Zach Sakis, Megan, as well as Greg Crossman. Am I missing anybody?
Gary.
And Gary. Sorry, Gary.
That's okay. Okay, let's proceed. Item number one. I'd like to open the public hearing, and I'll read what we're going to cover in this one. Public hearing on the feasibility report for 5 projects to be financed through the issuance of Water System Revenue Bonds Series 2021 for the Town of Carefree, Arizona Utilities Community Facilities District. This is a legally required public hearing of the district on the feasibility report for the Water System Revenue Bonds. I'd like to turn it over to Mr. Crossman, the General Manager of the Water Company, to take us through this presentation.
Thank you, Mr. Chairman, members of the board. Let me take a minute to share my screen and give you a PowerPoint presentation. Can everyone see my screen okay? In the
Yes.
PowerPoint presentation? Great.
Yeah, that's good, Greg.
Let me move my stuff around here real quick so I can see the screen. That's not good. There we go. Well, again, thank you, Mr. Chairman, members of the board, and good evening. All of the agenda items that we'll be covering tonight, that would be agenda items numbers 1, 2, and 3, all deal with the same topic, and that's the issuance of water revenue bonds for the Carefree UCFD, or the Utilities Community Facilities District. And that would be in support of the Carefree Water Consolidation Project. And just backing up a little bit, the mayor gave you a summary of what we're doing right now, but let me go through all 3 items real quickly. Agenda item number 1 is a legally required public hearing on the issuance of bonds for the district and on the feasibility report, which is a legal requirement under the Community Facilities Act of 1988. Once we get done with this public hearing, we'll then move on to agenda item number 2, which is the adoption by the district board of resolution 2021-11. I like to call this the bond resolution. It is a very broad and all-encompassing resolution. Essentially what the bond resolution does is it authorizes the issuance of bonds for the district. It approves the feasibility report, and it also approves a number of documents that are needed in order to move forward with through the bonding process. We'll then move to agenda item number 3, which is a recommended adoption by the Water Company Board. So this resolution then is for the Water Company Board to adopt. It's resolution 2021-12, and essentially what this resolution does, it affirms all of the actions that have been taken by the district board. Because the water company is very integral and a very integral part of this bonding process. And it also does some housekeeping measures for the water company, such as modifying or amending our articles of incorporation. So those are the 3 items that we'll be addressing at tonight's meeting. Agenda item number 1 is a public hearing, and Mr. Chairman has already opened the public hearing. It is a public hearing on the UCFD bonding effort and the feasibility report. This bonding effort is to support the actual acquisition of those customers and those areas within Carefree that are served potable water by the town of Cave Creek. Those areas are known as the Carefree service area and are shown in red on this graphic. And we also know those areas by their names of neighborhoods A, B, and C. So essentially what this bonding effort will do will be to fund what we call the Carefree Water Consolidation Project. That's going to be a construction project that will disconnect these neighborhoods, neighborhood A, B, and C, from the Cave Creek Water Company system, and then reconnect these areas to the Carefree Water Company system. Doing this will require a large capital expenditure, and thus the need for this bonding effort. This acquisition process to date has taken over 4 years, about 4.5 years. So it has been a very long process. It's been an orderly process. It's been a well-informed process with a lot of well-informed decisions. Nothing in this process has been a knee-jerk decision. Nothing has been a spur-of-the-moment decision. Discussions about the acquisition of the Carefree service area really in earnest started probably at the beginning of or in early 2017. At that point, we realized that we really did need some expertise to help us assess what it would take to acquire these areas of Carefree that are served potable water by Cave Creek. So we hired a consulting engineering firm to do just that, to kind of help us assess this and how much it was going to cost to acquire these facilities, to disconnect them from Cave Creek and to reconnect them to Carefree. After doing those investigations and studies, we did decide to move forward with filing a condemnation action with the town of Cave Creek as required in the IGA that we have with Cave Creek. That then initiated a 2-year arbitration process that ended in a settlement agreement with the town of Cave Creek that was approved in March of this year, in March of 2021. And we actually have passed the first major milestone in the settlement agreement of the payment of $1 million to the town of Cave Creek for acquiring the assets, the water assets within the Carefree service area. So this has been a very long and very deliberate process. And where we're headed with the acquisition process into the future is once we get done with tonight's meeting, if the sale of bonds is approved, we anticipate selling those bonds in August and acquiring those revenues to complete the water consolidation project construction. Currently, we're in the middle of final design for the Carefree Water Consolidation project. That will be taking us through probably the end of December of this year of 2021. We're hoping that construction on the consolidation project will begin sometime in maybe September or October of this year of 2021. And that will take us out about a year and a half to the end of 2022. We also hope that all of the new customers in the CSA, the Carefree service area, meaning neighborhoods A, B, and C, are transitioned over from Cave Creek Water to the Carefree Water Company system by the end of December of 2022. So just under a year and a half from now. It is important to note that all of these processes, final design, construction, and the transition from Cave Creek Water to Carefree Water will be phased and sequenced. And so you will note that some of the neighborhoods will transition over to Carefree Water sooner than others, but it will need to be taken in a very logical, sequenced, and phased process to get everybody transitioned over. What we wanted to do tonight was to give the board some background on bonding and financing and have a discussion with all of you on that process. It's not something that we do frequently. The last time the district bonded was back during the initial implementation of the district in 1998 when we purchased the water company. So I'll be first in that list, giving you an overview of our bonding details. We'll then turn it over to our underwriter to give you a discussion of the market conditions as they sit today. And our underwriter is the firm of Stiefel, Nicholas and Company. And we have two municipal bonding experts who've been working on this project. On the left of this screen, you see Mark Reeder. And on the right of the screen, you see Grant Hamill. Mark has really been leading the charge for this effort, but Grant has been involved in this project from day one. Mark has had another commitment, so he couldn't be with us tonight. So Grant will be giving us a discussion of what market conditions look like in the bond market today. We'll follow up with a discussion about the bond approval process and the legal steps that we need to take. And that will be done by our bond counsel, who's the firm of Greenberg and Trowrig. We have two bond attorneys that have worked on this project, Michael Cafiso, who's shown on the left on this screen, and Paul Gales, who's shown on the right on this screen. And Michael Cafiso will be the one walking us through the bond approval and legal steps, part of our discussion. So to give you an overview of our bonding details, the type of bond that we'll be issuing for the district are water system revenue bonds. These will be tax exempt bonds. And essentially what we're doing is pledging that we will collect enough money from our water revenues from our monthly water billings to be able to operate and maintain the water system, and also to be able to pay back our bondholders and our investors. And the water company will be instrumental in that effort, in that responsibility to pay back the bondholders. The actual bonding entity for this effort will be the Town of Carefree, Arizona Utilities Community Facilities District. So the bonds will be in the name of the district or the UCFD. The estimated bond principal amount is going to be just under $18.5 million, and the estimated bond proceeds will be just over $21.7 million. The difference between those two numbers is what's called the premium amount. And that's the amount that investors, the additional amount that investors are willing to pay for bonds that are issued at a slightly higher rate than the current market rate. And I'm sure Grant will be able to fill you in a little bit more on the premium amount. The expected true interest costs for this bonding effort are expected to be between 2.75% and 3%, and the repayment period will be 30 years. As far as our uses of funds, the first two items will be our hard construction costs for the Carefree Water Consolidation project. That first line item will be items that we need to pay 100% for. That amounts to about $14.5 million worth of hard construction. The second item will be a cost sharing item for the construction of a new Scottsdale interconnect along Carefree Highway, along with a large major transmission main, 16-inch transmission main along Carefree Highway. Our cost sharing amount in that project will be cost sharing with the commercial development at the northeast corner of Carefree Highway in Cave Creek Road. Our portion of that will be $1 million. What we call our construction soft costs are costs that are associated with peripheral items that we need to for construction, including final design, construction administration and inspection, pre-construction services for our CMAR, which is our construction manager at risk. And then our independent cost estimator will amount to about $1.8 million. The $1 million payment to Cave Creek is also included in this bonding effort. It already has been paid to Cave Creek on July 9th. So that will be a reimbursement amount to the district and to the water company. And we're also earmarking a pot of money for capital improvements for our existing Carefree Water Company service area to the tune of $2 million. So the sum of all of these construction and acquisition costs is $20.3 million. There are also some peripheral costs that we need to absorb, including capitalized interest, which is interest during construction that we need to pay. There are 3 capitalized interest payments we'll need to make, one at the end of 2021, the end of this year, and then 2 capitalized interest payments in 2022. Those will amount to $1 million. And then we also have the cost of the issuance of the bonds and the need to pay the underwriter, and that'll amount to about $400,000. So the total effort associated with this project and kind of the peripheral costs associated with issuing the bonds is $21.7 million. So with that, unless the board has any questions, what I'd like to do now is turn it over to Grant Hamill, who is our underwriter. He's the managing director with Stifel Nicholas and Company. Grant has 35 years of experience in the underwriting market and issuing bonds. And Stifel, in general, as a firm, is the largest underwriter in Arizona. They typically underwrite between 80 and 100 transactions per year in Arizona, which represents about $1 billion of funding annually in Arizona. And again, Grant will talk about the bond market conditions as they sit today. So again, unless there are any questions from the board, Grant, I'll go ahead and turn it over to you.
Very good. Thank you, Greg, for that excellent introduction, and good afternoon to everybody on the call this afternoon. Mr. Chairman, members of the board, it's a pleasure to virtually be with you today for the district's board meeting. As Greg indicated earlier, what he wanted us to provide the board is a brief discussion of the bond underwriting process. I also want to speak to the current market conditions. I think one of the silver linings to what has been a fairly extended process to bring this project to fruition is that the bond market has probably improved in almost every one of the last 3 or 4 years, to the point today where interest rates are near historic lows. That's certainly a great benefit to the town in undertaking this project. Greg touched upon a little bit about the timing for the bond sale, and I'll provide a little bit more detail in regards to that. Let me start first, and as Greg mentioned, the district as well as the town has not been an active seller of debt in the market. In fact, I think this financing will represent the first public offering of the district. And so there's some additional effort and work involved by the professionals to make sure that everything is in place for this offering and is incorporated into the preliminary official statement. And appreciate all the input from your bond counsel, the counsel for the water company, Dan Jackson with Wildan. Everyone participated in this effort to prepare this issue for market. But let me talk a little bit about our function as the underwriter to the district. Our primary responsibility is to place the CFD bonds with investors across the country at the lowest yields available at the time of sale. So to that end, our chief underwriter, his name is Mike Imhoff. He's based in our Denver office, and Mike will manage all aspects of the sales process. As Greg mentioned, we're very active underwriting debt in Arizona. We complete about 40 to 50 underwritings per year. That's far more than any other firm. And in addition to that, we serve as financial advisor on probably another 30 to 40 transactions in Arizona per year. So we're extremely familiar with the market. We know who the prospective investors are, and we're going to tap all of those investors to gauge their interest in the district's bonds. Now, to accomplish that, our plan, working with the other
Join the meeting.
is to finalize the bond preliminary official statement. And that's a document in draft form that is part of your district board packet. And we'll be looking to finalize that preliminary offering statement and hopefully be in a position to post that document by the end of this week or early next week. That preliminary official statement will contain the bond rating that is assigned to the sale from Standard & Poor's, one of the major bond credit rating agencies that the town staff and Greg have been working closely with over the last few weeks to assign a credit rating to the bonds. We should know what that rating is by the end of the week, and we'll incorporate that into the preliminary official statement. When we post that document, of course, these days it's pretty much all done electronically. That document will be available to all the major bond investors in the country that buy municipal bonds. Our focus, of course, will be on those buyers that purchase tax-exempt municipal bonds. There's a lot of taxable bonds issued as well. But as Greg mentioned earlier, these bonds will be the low interest rate tax-free bonds. And when we post that preliminary official statement, that will commence what I'll refer to as the pre-marketing period for the bonds. And what is accomplished during the pre-marketing period is that we will undergo a pretty comprehensive Salesforce education with our internal staff here at Stifel, who are responsible for selling bonds to both retail and institutional investors. We'll also be having conversations with prospective investors. A lot of these investors will be the major bond funds that you're familiar with, including Fidelity, Northern Trust, Vanguard, Goldman Sachs, Nuveen, other names that you're familiar with who are very active in buying bonds for their portfolios and their municipal bond funds. As I mentioned, because this is the first publicly issued bonds by the district, we'll really focus on educating investors about the town of Carefree, the water system, what the improvements are going to be, why it was important to acquire these additional customer accounts from the that are currently being serviced by the town of Cave Creek. And so we'll really focus on an educational process because a lot of investors will be unfamiliar with the town and its location and things of that nature. Secondly, we'll really focus on evaluating market conditions leading up to the bond sale. The bond sale, as Greg mentioned earlier, we're looking to probably target that bond sale around mid-August and then look to close the financing towards the end of August, early September timeframe. At the end of the pre-marketing period, we'll really focus on preparing for the actual sale of the bonds. We will establish a specific sale date, and prior to that sale date, we'll be having phone discussions with town staff with regards to market conditions that we see. We'll be sharing with staff some of the comparable rated financings that are being undertaken in Arizona and other states, because we will be looking at those financings to give us an indication as to what the bond yields are that investors are going to require to commit capital to the district's bonds. We will then, on the date of sale, commence an order period for the bonds, which will last approximately 1.5 to 2 hours. Kind of an amazingly short period of time to sell $20 million of debt, but that's very common today to have a fairly abbreviated sales period because demand for that debt is very strong, and we're anticipating a very healthy demand such that it's very possible that the district's issue could be oversubscribed by investors. In other words, the demand will exceed how many bonds that we have to sell. That's always a good thing when you're a bond issuer. We will receive those orders during that prescribed order period, and we'll evaluate that investor demand and then make recommendations to the district town staff with regards to what we think the final interest rates and yields should be for the bonds. Once we get that verbal award, we will then look to work with our council and district bond council to execute the bond purchase agreement that exists between our firm as the underwriter and the district as the issuer of the bonds. At that point, and this will be the afternoon on the date of sale, we'll then be able to confirm the orders for the bonds and then start making preparations for the bond closing that will take place in the offices of Greenberg Traurig as the bond counsel for the district. Now, I mentioned earlier, conditions in the bond market are extremely favorable. So I think the timing for the sale is ideal. Currently, we have a demand for bonds that is greater than the supply. So we have a supply and demand imbalance, if you will, that is causing bond yields to fall because the demand exceeds the supply. If you look back to August of 2020, that was the low point in the municipal bond industry as far as yields. And today, now almost a year later, we're still within about 10 basis points of the historical lows that were set in August of last year. That's just 0.10%. So we're in an extremely favorable time for the town to undertake this project and to execute this, this financing. You might ask, why are conditions in the bond market so favorable right now? I'll give you 5 reasons that I came up with for what is driving the strong demand that we're seeing. First, as you all know, the Federal Reserve is committed to keeping interest rates low. They don't see the economy currently as having fully recovered from the pandemic, and they are utilizing very accommodative monetary policy to make sure that the economy continues to perform with the goal of reducing the unemployment rate and getting people back to work. Secondly, I would say the demand is coming from investors who feel that stock prices are overvalued, and they're looking the bond market as a safe haven to park their money until they can get some more clarity with regards to what is transpiring in the stock market and whether there might be some kind of correction in the near term. Thirdly, and this has gotten a lot of attention recently, the Delta variant and the concerns that that will have an impact on our economic recovery if certain pandemic restrictions are put back into place. And investors think, if that happens, that could have an adverse impact on the economic recovery on stocks. So they see bonds again as a safe haven to wait and see what happens with regards to this Delta variant. Also, you have investors that think the inflationary pressures that we're experiencing now are transitory, that they're not going to last. As you all know, inflation is a factor that is very harmful for bonds because bonds are considered fixed income investments, and inflation eats away at the buying power of those investments. So inflation could be transitory, and investors think bonds, even though the yields are extremely low, continue to be a relatively good buy. And then finally, there's significant cash that's coming into the bond market. This is coming from two different locations. One, there's just investor money that's coming into the tax-exempt bond funds. That's totaling about $1.7 billion per week. And then secondly, we're experiencing a lot of bond redemptions. So as investors have their bonds called and retired, they're looking for other investment opportunities for their money. So again, surplus cash in the market, driving bond prices higher and yields lower. These conditions are a boon to bond issuers and frankly, a bane to investors. Investors hate these extremely low yields, but they really don't have any other options. Finally, let me just talk a little bit about timing. And this is something that Greg referenced in his introduction. Again, we're looking to post the offering document by the end of this week, early next week at the latest. We will look to price the bonds the week of August 9th or the week of August 16th. Again, subject to market conditions at that time. And then we will set the bond closing toward the end of August or early September. That concludes my market update, and I would be very pleased to respond to any questions that the board or staff may have with regards to that underwriting process. Turn it back to you, Greg.
No, thank you, Grant. Appreciate that presentation. Very, very informative. Did we have any questions from the board? Hearing none, let me go back to my presentation. Thank you again, Grant.
Sure.
One other item and reason that we're having the public hearing is a feasibility report. And I thought I'd just real quickly go through
Greg, yes. I apologize. I was a little slow to the draw, but I did have a question for Grant, and maybe Grant already touched on this, and if he did, I apologize as well. So if we take advantage of the bond market now, how long are these rates guaranteed? So in other words, how long do we have to act on a set rate that's locked in? Is there is it like a 90-day period? How does that work?
No, that's a very good question. I'm happy to respond to that. Now, at the time of sale, since these are fixed rate tax exempt bonds, we will establish the interest rate and the yield of those bonds, and they will be fixed, not subject to change until the bonds mature. The district will include, for flexibility, an optional repayment of the bonds, so that after a period, typically 9 or 10 years, the district, if it's favorable to do so, could exercise a refinancing of that debt and potentially replace the bonds at a lower rate of interest if those rates exist at or near the time that they're eligible to be called. But once these bonds are issued, the interest rates are fixed and will not change.
Grant, this is Steve. Can you hear me okay?
Yes, I can.
You had mentioned a call date of 9 to 10 years. Has that been a recent change? Because I believe historically they run about 5 years on that. I mean, I was just curious that. And also, I thought I heard someone, and my Zoom thing died on me, so I apologize. With respect to the rate we're going to be offering, he mentioned something about premium bonds for about $3 million. I missed that whole section. I apologize because my thing died. If you could recap that for a second.
Absolutely, I will. Yeah, today, depending upon the term of the financing, investors are willing to pay the most for your bonds if they're able to have a period of call protection.
Mm-hmm.
In other words, if you issue these fixed rate bonds that, mature in 30 years, investors are not wanting to commit to accepting those low interest rates if the district as the issuer has the ability to call those bonds away after 2 or 3 or 4 years. So depending upon the repayment term, and in our case, we're dealing with a 30-year repayment term, the pretty much the standard period of call protection is 10 years for a bond of that length. If the district was only selling bonds that matured, say within 10 or 12 or 15 years, we could shorten that call date to probably, as you said, maybe a 5 or 7 year call date.
I get it. I'm with you. And then the premium business for a minute, once again, I apologize. My thing died.
No, that's okay. And actually, Greg covered this well in his board communication, and it's kind of a difficult concept for people that are not in the industry to understand. But because, and I'll try and do so, and I'll be happy to respond to any follow-up questions. But because interest rates are so low today, bond investors prefer that the issuer for each of the bond maturities sets an interest rate that is higher than what the market yield is for that particular bond maturing on that date. And the reason for that is that they anticipate that at some point, interest rates are going to rise. And when they do, the fact that they have a coupon rate that exceeds the market yield, that provides them a little bit more of a defensive position, a little bit more of price protection that they would have as opposed to if they bought the bonds at a price of par. So virtually every tax-exempt municipal bond being offered in the market today is sold with premium. We don't know exactly how much that premium will be because it's really dependent upon market conditions at the time of sale. But our objective will be to make sure that between the bond principal and the amount of premium that we've collected, that we have enough money, as Greg said earlier, to pay for the cost of the project and pay for all of the issuance costs.
So the expected, what Greg is showing up on the screen here, it says 275 to 3.
Yeah.
Is that the nominal rate we're going to have, and possibly the additional premium might be a 3 1/4 or 3 1/2?
No, that premium factor is included in that true interest cost, and frankly, I'm hoping that's conservative. We're wanting to be conservative. We're hoping that it's less than that, but that basically reflects the true interest cost as the present value for the proceeds that the district is receiving in comparison to its cost over the next 30 years. So it's really a present value calculation.
Right. Okay. Yeah, I get it. I think that's good.
Yeah.
Very good. Makes it easier to
board member Hatcher.
It's easier to sell. I get it.
Yes, correct.
And market stability too.
And because we're catering to the investor, they're willing to accept a lower yield if the bonds can be sold at a premium. And that's our primary objective.
And that's a $3 million you're referencing potentially?
Yes.
The premium?
Yes.
Yeah.
That's right.
Okay.
Hey, any further questions from directors? Thank you, Grant. We'll turn it back over to Greg.
Yeah, thank you, Grant. I appreciate that. Real quickly, another legal responsibility we need to hold this public hearing on is the feasibility report. And just real quickly, I wanted to go through some of the items that are covered in the feasibility report. We've talked about most of these already in this presentation, but section 1, and all these are talked about in the legal requirements for feasibility report. Section 1 needs to include an introduction, the purpose of the report, and a general description of the district. And the feasibility report, by the way, is included in your board packet. I think it is the first attachment in your board packet. Section 2 is an estimate of the cost. For us, it's the estimate of costs of construction and acquisition. O&M costs will be covered by the water company as we move forward into the future. Section 3 is a map of the public infrastructure will be provided and the area that benefits from this bonding effort. And then section 4 is a schedule for completion, which we've talked about, having the entire project done by the end of 2022. And then section 5 is the plan of finance and how we anticipate bonding for this project. So with that, I'd go ahead and turn it over to you, Mr. Chairman, for taking any public testimony associated with this public hearing.
Okay, thank you, Greg and Grant. Those were excellent. Candace, do we have any written public comments that have come in?
Chairman, we had not. Let me check one more time. No, nothing.
Okay, there's no written that has come in. Is
No,
there
sir.
anyone that is on this Zoom link with us in the public that wishes to make a comment?
I don't see anybody raising their hand.
Okay, hearing none, I would like to close this public meeting and conclude item number 1 on our agenda. I would like to go on to item number 2, review, discussion, and possible action regarding the district resolution 2021-11, approving the feasibility report for certain projects, authorizing the sale and issuance of water system revenue bonds, series 2021, prescribing certain terms and conditions of such bonds, approving the form and authorizing the execution and delivery of necessary related documents and an official statement, delegating the determination of certain terms of such bonds and matters related thereto to district officials, and authorizing the taking of all necessary and other actions necessary to consummate the transaction contemplated by this resolution, including actions by the district as the sole shareholder of the Carefree Water Company in securing payment of these bonds. I'd like to turn it over to you, Greg, for discussion on this point.
Thank you again, Mr. Chairman. We do have our bond counsel with us tonight, Michael Cafiso. Michael is with the firm of Greenberg and Trowrig. Michael will be talking to us about the bond process and the legal steps, which are really all encompassed and encapsulated in this agenda item. Michael has 35 years of experience with being bond counsel and working as bond counsel for various entities. He's been doing this work since 1988. And we're lucky to have Michael because he was actually the bond counsel for Carefree, or the Carefree UCFD, back in 1998, when we originally formed the UCFD and did a bonding effort for the purchase of the water company. So what I'd like to do now is turn it over to Michael to give us a kind of an overview of the bonding process and all the legal steps that are encapsulated in agenda item number 2. So, Michael.
Thank you, Greg. Can everybody hear me?
Yes.
Yes.
Okay. Mr. Chairman, members of the board, again, my name is Michael Cafiso. I'm with the law firm of Greenberg Trowrig. Greg gave me a nice introduction there. I appreciate it. What I'm going to do is try to summarize what's in the 70-page bond resolution that you guys received as part of your board package for the meeting tonight. There's been a lot of time spent on the bond resolution because, as was indicated in Grant's presentation, that's really a document that the district and staff's going to have to live with during the next 30 years while the bonds are outstanding. So what that resolution does is it in the first part provides for the issuance of the bonds that Greg's referred to and that Grant described. So that's really the important part about what the resolution does. As Greg mentioned in the introduction of the resolution, we have the board approve the feasibility report that Greg described. That's required by section 48-715 of the statute. The statute also requires that as part of the hearing process, and what was noticed in the hearing is that there also be a hearing on the issuance of the bonds themselves. That's required by section 48-720 of the Arizona revised statute. So that's the purpose for that hearing, and the first part of the resolution approves both the feasibility report and the actual issuance of the bonds. The resolution then goes on to provide for exactly how the bonds will be issued. One of the things the resolution does, and I think this addresses in part one of the questions one of the directors was asking, is it delegates to the district manager within certain parameters the ability to sell those bonds pursuant to the bond purchase contract that Grant described, and I'll get to the details of that bond purchase agreement in a minute. So basically in the resolution, we've set out parameters for the not to exceed principal amount, the not to exceed yield, the not to exceed maturity. And the reason we do that is we want the board to say, okay, as long as you're within those parameters, the district officials delegated in the bond resolution have the ability to lock in those interest rates that Grant described earlier. And that's pretty important because, as Grant mentioned, the process moves very quickly. We want to take advantage of the timing that we have and then lock those investors in and make sure that as long as all the things that need to happen between the point of the sale and the point of the closing occur, you guys are assured that those interest rates will be the ones that you end up with in the final terms of the transaction. So the resolution goes on to spell out specific terms of the bonds. There are a lot of things that need to happen in terms of how the bonds get physically issued, the process by which the bonds get paid, the process by which the bonds can be transferred. Like what happens in terms of the sale of the bonds, most of this has been converted to a digital process. So the bonds are really no longer delivered in physical form. They haven't been for a long time. The investors actually get entries on brokerage statements, and the resolution provides how that process will be set up. Probably the most important part of the resolution from the investor standpoint is the security and source of payment for the bonds. None of us like to talk about what could happen if there's problems with the system or inability to raise revenues, but that's very important to the investors. The investors want to know that that they're going to be protected. So there's a series of financial covenants, a series of operating covenants that are in the bond resolution for the benefit of the bondholders. They include things like the fact that the system has to be economically operated, that rates and charges have to be set at levels adequate to produce not only amounts necessary to pay operation and maintenance costs, but also an amount above and beyond on an annual basis what it takes to pay debt service. And we call that a coverage test, and it's something that the rating agencies looked at when they evaluated the district for the rating that you'll be receiving in the near future. So those covenants are very important. The resolution also includes remedies because if, for instance, in the worst case, and again, we never like to talk about these things, we're not implying any of this would happen, but 5 years from now, everybody's different in terms of staff and the board, and the board doesn't want to do what they need to do, or other things happen. You could have a situation where bonds aren't getting paid or covenants are being violated. So the resolution includes a list of what the remedies or what the defaults are specifically, and then what the remedies that can be exercised on behalf of the bondholders would be. There's a trustee that's appointed that acknowledges the bond resolution. In this case, it's U.S. Bank National Association, a major money market bank. They are able to look out for the bondholders, and by acknowledging the bond resolution, they agree to step in and deal with not only the requirements for payment and transfer and those sorts of things, but also if there are situations where remedies need to be exercised, they will do so at the direction of the bondholders. That's a quick overview of the resolution. Let me quickly review the documents that you're approving pursuant to the resolution. So as Greg mentioned, there are a number of transaction documents, and when you start stacking them all up, we're talking about probably hundreds of pages of stuff, but that's what it takes to get one of these transactions done. In your case, probably the most important, one of the most important documents that is approved by the resolution is a payment agreement and collateral assignment. And one of the things that we've accomplished in this transaction after a lot of work on staff's part, was to try to line up, or not try to line up, but we lined up how you guys actually operate through the water company with how the bonds will actually end up getting paid. And this is kind of an important point, and I don't want to drill too deep into the federal tax aspects of how the whole relationship is set up, but the Carefree Water Company is pursuant to a private letter ruling that was rendered back in the late 90s, is an integral part of the utilities district. And what that means is that the IRS treats them as a single entity for purposes of the actions they take. So the way the water system has been operating for most of its life is that the water company is really kind of the front person in all of the activities of the water system. So it operates and maintains the water system. It employs the folks that work to maintain and operate the water system. It sends out bills and everything else to have revenues collected from folks that use the water system. So what the payment agreement does is it continues to have the water company do those things, and it agrees, though, that it understands that the district is actually incurring the debt that Greg described earlier to make all the improvements that we talked about. And so what happens under the payment agreement is that the company agrees to pay to the district as necessary on a semi-annual basis, well, actually on a monthly basis for deposits under the bond resolution, amounts adequate to pay principal and interest on the bonds. And then there's a collateral assignment by the company to the trustee to be able to enforce that agreement to pay if the company's not paying those amounts to the district. So that's kind of the motor that makes the whole bond resolution run, is that payment agreement, and that's one of the agreements that's being approved by the resolution. Grant referred to another document that's important, which is the bond purchase agreement between Stiefel Nicholas, his firm, and the district and the company. And pursuant to that agreement, as Grant described, the bonds are sold by the district to the underwriter, who then goes out and finds the investors. So there are obviously things that we want to make sure that are properly done in connection with the sale of the bonds. This is a fairly important process, and one that we are very careful about, because we're accessing the federal securities markets, and as most of you are probably aware, there's lots of rules and regulations when you do that. So the bond purchase agreement has the district and the company represent and warrant a lot of things about the truthfulness of statements it makes in connection with the sale of the bonds, sets up the process for the actual payment of the bonds, the delivery of the bonds, responsibilities of the parties to that bond purchase agreement. So that's the second document. There are also two sets of different procedures, and we could spend a lot of time talking about each of them individually. I won't do that. I'll just give you a quick summary. As was mentioned earlier, the bonds are being issued on a basis on which the interest income is exempt from federal income taxation. And what that means is that there's reciprocal immunity between the federal and state government and the district, such that the interest on the district's debt is exempt from income taxation. So if I'm a buyer of that debt, I don't have to pay taxes on the interest as I would with a taxable bond. That gives the district the benefit of the lower interest rates we described earlier. Grant could give us maybe a conversion if we were interested in what the interest rate would be if we didn't have that tax exemption available to us. But the Internal Revenue Service and the Treasury is very careful about how that tax exemption is used. They don't like people taking advantage of it, private entities, for instance, taking advantage of the ability to access tax exempt borrowings, taking advantage of the difference between taxable and tax exempt rates. So the tax procedures that you're approving in the resolution tonight are procedures that the district staff can go through on a routine basis to make sure they're complying with the 400 or 500 pages worth of regulations you have to be in compliance with to make sure that you're doing what you need to do to keep the interest exempt from federal income taxation. The other set of procedures you're approving tonight are what are known as continuing disclosure procedures, and those relate to requirements that before underwriters can underwrite bonds, they have to know that the issuer of those bonds is going to agree to provide certain ongoing financial information to the securities market. So after the bonds are sold, if someone wants to buy or sell a bond, the Securities and Exchange Commission, through this process, makes sure that I can go to an electronic portal and I can get information on an annual basis about the district's performance, issues related to revenues that repay the bonds, et cetera. And also, it's a place where notices are flagged if certain important events occur. And that's required as a part of the federal securities law to be able to sell the bonds. Lastly, and probably most importantly, is the offering document for the bonds. And as Grant mentioned it several times during his presentation, one of the things that goes on is that the brokers that sell these bonds will have contact with various kinds of investors, both retail investors in terms of, in other words, individuals, and also funds that would buy larger amounts of the bonds. So, mutual funds, insurance companies, financial institutions, those sort of folks. Yeah, obviously, there's a lot that those folks are going to want to know about before they're going to be interested in telling you, much less being interested in buying the bonds, but telling you what interest rate they would demand for each maturity of the bonds. And what the official statement does is lay out for those investors information about the district, so the history of the district, the way the bonds are going to be repaid, history about the past performance of those revenue sources, all the background for understanding why someone might be interested in investing in one of the bonds. That document is a real important document because the way the federal regulators look at it, that's the district's document. And the district has to be comfortable that the document includes all the material information about the district, the repayment source of the bonds, all the related matters, and that it doesn't omit anything, the omission of which would be material. And so that's a fairly high bar. And so it's a document that we spend a lot of time on. There was a disclosure review call that went on for probably an hour and a half. I was out of town, didn't join, but heard after the fact about it, in which that document is sweated very carefully, and we make sure that everybody's comfortable with the disclosure. Lots of questions are asked, that are intended to make sure it does what it needs to do. So those are the 5 major documents. There's a pile of other documents that the chair and the district clerk will get to sign in connection with the ultimate closing, but those are the important ones. That's really what the resolution entails. Approval of it is intended and is drafted very carefully to make sure it does everything it needs to do, so we don't have to come back to you between the time of this meeting, the sale, and then ultimately the closing of the bond issue. I'd like to take a quick minute to say, give my compliments to the staff. Greg especially has spent a lot of time on this, and I'll tell you that he really drilled into the detail, especially with all the other stuff he had on his plate. It was a lot of work for him. Gary was obviously very helpful. The clerk there as well was instrumental in pulling all this together and getting everything done for us. So we really appreciate all the work that they've done, and Michael Wright and Zach Sakis as well, in terms of acting as general counsel for the district and for the company.
Great, thank you, Michael. Appreciate that presentation. Are there any questions from the board?
Hearing none, I would like to have a motion to adopt resolution 2021-11 as presented.
So I move to approve resolution number 2021-11.
I'll second.
So the motion has been made and seconded to approve 2021-11 as presented. Any further comments, discussion from the directors? Hearing none, Candace, would you please poll the directors?
Yes, Chairman. Board Member D'Alessio, how do you vote?
Aye.
Board Member Croyer, how do you vote?
Aye.
Board Member Geiger, how do you vote?
Aye.
Vice Chair Crane, how do you vote?
Aye.
And Chairman Peterson, how do you vote?
Aye.
So you have 6-0.
Motion 2021-11 is as presented, passes by a 6-0 vote. We'll close item number 2 and go on to item number 3. Review, discussion, and possible action on Water Company Resolution 2021-12, authorizing and approving a pledge of, lien on, and security interest in the net revenues of the water system in connection with the issuance and sale of Town of Carefree, Arizona Utilities Community Facilities District Water System Revenue Bond Series 2021, and authorizing and approving the execution and delivery of certain agreements and instruments related thereto. Mr. Crossman, would you like to say anything there, please?
Thank you, Mr. Chairman. Thanks for that introduction to agenda item number 3. We do have another member who's been working on this bond issuance who will give us kind of an update and a summary of the water company bonding and legal steps that we need to take associated with agenda item number 3. And we have with us tonight Zach Sakis, who is Mike Wright's colleague. Zach works for Sherman and Howard. He's being employed by us as what we're calling kind of a special position in issuers counsel and special counsel to the water company. Zach's got 15 years of experiences in this world of bonding and bond counsel. He typically does act as bond counsel and underwriters counsel, but for this bond issuance, we have hired him as kind of a special consultant for the water company. So with that, Zach, I'll turn it over to you, and you can fill the board in on how the water company is related to agenda item number 3 and what steps we need to take in this bonding and legal effort that we're undertaking. So Zach.
Great. Thank you, Greg. Is my sound okay for everybody?
Yes.
Actually, it's good, Zach. Thank you.
Okay, perfect. So my name is Zach Sakis. As mentioned, the firm of Sherman and Howard has the pleasure of serving as town attorney, and in that capacity, we also serve as counsel to the district and counsel to the water company. For agenda item number 3 tonight, what we're doing is, as Michael Cafiso mentioned, for agenda item number 2, there is a payment agreement between the UCFD and the water company, whereby the water company will agree to collect revenues and rates from system customers and then pay certain amounts over to the district, which the district will then in turn pay to bond investors. So although for convenience, the district and the water company boards meet in these joint meetings, this action pertaining to agenda item 3 is an action in your role as the water company board. So while the district moments ago has already approved the forms of the payment agreement and the bond purchase agreement, now we're going to put on our other hats as water company board and also approve the forms of those agreements, because again, the water company is also a party to those in addition to the district. Furthermore, this resolution will, similar to the bond resolution, delegate certain authority to, in this case, water company staff to take additional actions as necessary to complete the bond transaction. And lastly, there is a form of articles of amendment to the water company's articles of incorporation, which is more of a cleanup item. The articles of incorporation currently mention the 1998 financing, which has been fully repaid. So that's more of just a cleanup item. And with that, I'm happy to take any questions related to this action by the water company board.
Thank you, Zach. Any questions from the board?
No, we're good.
Hearing none, I would accept a motion to approve Water Company Resolution 2021-12 as presented.
I move we approve resolution 2021-12.
I second.
second.
Okay, motion has been made and seconded. Is there any further discussion on approving resolution 2021-12 as presented? Hearing none, I would ask Candace to please poll the directors.
Okay. Board Member DiAlicio, how do you vote?
Aye.
Board Member Hatcher, how do you vote?
Aye.
Board Member Geiger, how do you vote?
Aye.
Board Member Croyer, how do you vote?
Aye.
Vice Chair Crane, how do you vote?
Aye.
And Chairman Peterson, how do you vote?
Aye.
You have a vote of 6-0.
Thank you, Candace. So Water Company Resolution 2021-12 passes as presented. Is there, let me ask any of the participants, is there anything else we need to cover in this meeting? Hearing none, I would accept a motion for adjournment.
I so move.
Second.
I'm assuming everyone's in favor. Please say aye.
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 Okay, thank you all. We appreciate all your work. It's excellent, and I know it's been a lot of work.
Nice,
Thank-
nice work, guys.
Thanks,
Thanks,
Greg.
everybody.